All right, so we're back for another deep dive. And this time we're looking at BJ's Wholesale Club, ticker BJ.
Yeah.
And we want to really break down what they had to say on their latest earnings call. What kind of signals are we seeing for the future of this company?
Exactly. Earnings calls can be a treasure trove of information for investors, but let's face it, sometimes those reports are, a little dense. Let's just say we've done the sifting for you.
Yeah, absolutely. So right off the bat, the headline is pretty positive. BJ's actually beat expectations for Q4, both in how much they grew their comparable sales and their overall profitability.
And it's not just a one-quarter thing. This actually wraps up a year where they hit record highs across the board. I'm talking net sales, membership numbers, even their adjusted earnings per share. It's a pretty impressive streak.
Record numbers. I mean, that's music to any investor's ears.
Yeah.
So let's zoom in a bit. Let's look at those comparable club sales, specifically excluding fuel. We see a pretty solid jump, 4.6%. What's the story there?
Well, the really interesting thing is that this growth is largely driven by foot traffic. More people are actually going to BJ's. This is the 12th consecutive quarter where they've seen increased traffic.
Wow, 12 quarters in a row.
It's pretty impressive, right? That kind of consistent foot traffic says a lot about their ability to just draw customers in. Plus, we also saw an increase in the amount each member is spending on average, partially because of unit growth, so a good sign there.
Yeah, 12 quarters straight. I mean, that's not just some random blip. It really points to something fundamental about what they're offering that's really clicking with consumers.
So let's dig into how different departments performed. Where were the biggest wins?
So their perishables, grocery, and sundries division actually showed really good growth, over 4% in comparable sales. And perishables were actually the star performer the entire year.
Mm-hmm.
I think this shows how BJ's is really becoming more than just a place for, bulk buys. It's becoming a destination for those everyday fresh essentials too.
Yeah, that makes sense. People are thinking about value more than ever these days. Right. But what I found really interesting is that general merchandise and services also had a really strong showing.
Okay.
Comparable sales there grew over 5%, and for the first time since the pandemic, it actually outperformed consumables. Now, that's a shift worth noting.
Absolutely. It really shows that they're diversifying and they're not just a one-trick pony anymore.
Yeah.
What were some of the specific standouts there?
Well, gifting items performed really well, and consumer electronics saw high single-digit comparable sales growth, which is impressive given how that sector's been doing overall. Video games, tablets, and audio were the real drivers there. Toys actually led the way in seasonal sales, low double-digit growth. And they attribute that to an improved selection. And even in apparel, children's clothing saw some good growth helped by a bit of colder weather. It seems like they're really tapping into a wider range of needs.
So strong performance across a lot of categories.
Yeah.
Now, BJ's also laid out their main strategic priorities. What are they really focusing on to keep this momentum going?
Well, they highlighted 4 key areas that are driving their strategy. 1 is strengthening member loyalty. 2 is creating that unbeatable shopping experience. And then it's providing value in a convenient way. And finally, it's about expanding their footprint. So each of these plays a big part in their overall growth plan.
Okay. A lot to unpack there. Let's start with member loyalty. How are they doing on that front, and what are some of the initiatives they're using to keep those members engaged?
Well, the numbers tell a pretty clear story. Membership fee income went up 8.5% for the full year, and their renewal rate is staying strong at 90%. I mean, that kind of stickiness is incredibly valuable in retail. It means their revenue is more predictable, less vulnerable to sudden economic shifts.
Yeah, 90%. I mean, that's not just a good number. That really speaks to a strong moat they've built around their brand. People see the value, and that makes a huge difference.
Absolutely. And they've been smart about adding value for members, too. They enhanced their credit card program, they offer gas discounts for Club Plus members, and they rolled out new perks like free same-day delivery. All of that combined is driving both overall member growth and a lot of upgrades to their higher-tier memberships. So those now make up almost 40% of their membership base. And consistently growing the number of members in their existing clubs is a major win. It shows their existing locations are getting stronger.
It's a powerful sign for sure. This kind of stickiness is a big differentiator in retail. Now, what about that whole unbeatable shopping experience? I mean, it sounds a little bit vague. What are some tangible things they're doing to make that happen?
Yeah, unbeatable. It's a pretty high bar, right?
Yeah.
But they're actually focusing on some very specific things. They really emphasize their strong pricing position, saying that their prices are up to 25% better than traditional grocery stores. They're also working hard to improve their assortment across all categories, with a special focus on general merchandise and enhancing that, treasure hunt kind of feel that can really draw shoppers in. Their own private label brands are becoming increasingly important too. They now account for 26% of merchandise sales, and they're aiming to hit 30%. Their Fresh 2.0 initiative, which is all about, fresh produce has been a big success. Double-digit comparable sales growth for the past 3 quarters in that category.
That's impressive.
Yeah, and there's an interesting side effect of that. Members who are new to buying fresh produce at BJ's are showing stronger shopping habits overall. So it's creating a positive ripple effect.
Yeah, it's like they're trying to create a whole ecosystem that keeps people coming back for more than just the basics, that focus on fresh and that treasure hunt aspect.
Right.
I mean, it could definitely lead to people visiting more often and spending more each time.
Right.
So convenience is obviously huge for today's consumers.
Right.
How is BJ's adapting to the digital world?
This is a massive growth area for them. Their digitally enabled comparable sales were up 26% year over year.
Yeah.
And 53% on a 2-year stack. So services like BOPI curbside pickup and same-day delivery, those are the major drivers. And they're investing heavily in their mobile app too, adding features like digital coupons, product location within the store, express pay, personalized messaging, you name it. Oh, and they've even got AI-powered search to help you create a shopping list. So they're trying to make the entire experience, whether you're shopping online or in-store, as smooth as possible. And it seems to be working because about 60% of their members are now engaging with them digitally.
60%. I mean, that really underlines just how crucial their online strategy is. I mean, if you don't have that, you're really missing out.
Yeah, it's all about meeting the customer where they are.
Exactly. So last but not least, let's talk expansion. What are their plans for growing their physical footprint?
Well, they're in a pretty aggressive growth phase. Right now, they're building a lot of new clubs. In fiscal year 2024, they opened 7 new clubs and 12 gas stations. They even hit their 250th club, and they did it in a brand new state, too.
Nice.
Yeah, they've actually already opened 2 more clubs since the year ended, and there are more on the way. Their current pipeline of approved new clubs is actually the biggest in company history.
Yeah.
And they're planning to open 25 to 30 new clubs over the next 2 fiscal years. What's really encouraging is that the new clubs opened since 2020 are performing really well. They're contributing to comparable sales at over twice the chain average. That's a great sign.
It is definitely a good sign.
Yeah.
So they're not just expanding, they're expanding strategically.
Right. And to support this whole expansion effort and to make their operations more efficient, they've announced plans to build a 4th ambient distribution center. They're also planning to enter a major new market, Texas, in 2026.
Texas, I mean, that's a big move. It's
Yeah.
a huge market. That's a big statement about their confidence in the brand.
Yeah, absolutely. So we've talked about the bigger picture. Let's narrow our focus down to the 4th quarter financials. Specifically, what were some of the key numbers? All right, so in Q4, net sales reached $5.1 billion, which was a 5.4% increase year over year when you compare it on a 13-week basis. Merchandise comparable sales, excluding gas, were up 4.6%.
Yeah.
Total comparable club sales, including gas, actually grew by 4%, and even their comparable gallons of gas sold increased by 3%, which is pretty impressive considering what's happening in the wider industry. And as we talked about earlier, digitally enabled comparable sales were up by a strong 26%.
Very strong. So what about the profitability side of things? Margins, earnings per share, how did those look?
Well, merchandise gross margins saw a small dip of about 10 basis points year over year. They said this was mainly due to their approach to pricing. They want to manage prices on certain key items to really provide good value for members. And the strong performance of fresh produce, which tends to have a different margin profile, also played a role. Their SG&A expenses, so those are the selling, general, and administrative expenses, those did go up primarily because of the costs associated with those new locations, strategic investments, and also higher incentive compensation. But interestingly, the profit they make per gallon of fuel has kind of normalized.
Okay.
So their earnings per share came in at 92 cents, and their adjusted earnings per share was 93 cents. That included a 26.3% effective tax rate, which was because of a one-time tax benefit. Inventory levels were up 4% compared to last year, but on a per club basis, they were actually flat, and their in-stock positions actually improved.
Okay, so some pressure on margins, but strong top-line growth and overall profitability looks pretty solid. Now let's look ahead. What's their outlook for the coming year, fiscal year 2025?
Well, they're projecting comparable sales growth, excluding gas, to be somewhere between 2% and 3.5%. They expect their membership fee income to grow even faster than their long-term mid-single-digit target, mainly because of a recent hike in membership fees. And the impact of that's going to build throughout the year. They think their gross margins will improve thanks to some cost discipline. And those merchandising strategies we talked about, like growing their own brands, they are anticipating a little bit of an increase in their SG&A expenses as a percentage of revenue. So a slight what we call deleverage, mostly because they're opening new clubs at such a fast pace and because they're taking on more ownership of those locations. They're planning for an effective tax rate of around 27%. And their adjusted earnings per share are projected to be somewhere between $4.10 and $4.30.
Got it. So continued growth, but also continued investment,
Right.
particularly in that footprint expansion. Now, for our segment, this is not financial advice.
Right.
We like to take all this information and, maybe stretch it a little bit into the realm of what ifs and maybe this will happen. What kind of outlandish, but just maybe plausible trade idea has popped into your head?
All right, so how about this? Given BJ's huge push into Texas and their focus on really beefing up their fresh produce section with Fresh 2.0, I'm thinking, consider this. You go long on a publicly traded company that specializes in industrial refrigeration and climate control solutions, the kind that are really built for these massive warehouses and distribution centers, and specifically look for one with a strong presence in Texas and the Southeast. You see, BJ's expansion, especially into Texas, is going to require a lot of investment in cold chain infrastructure to keep all that fresh produce fresh. Now, this isn't a direct play on BJ's stock, but it's kind of like a bet on one of the key enablers of their growth strategy, and in a new, very warm climate. Think about it. The demand for those specialized cooling units is going to spike as BJ's builds out its network of clubs and distribution centers in Texas. So it's a picks and shovels play, but for keeping everything perfectly chilled in the Texas heat.
I like that. Betting on the chill behind the till. As always, folks, this is just a thought experiment, not a recommendation. Do your own due diligence before making any investment decisions. So as we wrap up, what are your main takeaways from this deep dive into BJ's latest earnings call?
Well, I think the main message is that BJ's has some real momentum. Their membership base is strong and engaged. Their comparable sales keep growing. Those strategic moves they're making in digital and fresh produce, those are paying off. And they've got ambitious plans for expanding even further. Now, there's a little bit of pressure on their margins, which is something to watch. But overall, I think the picture is pretty positive. This is a company that's executing well, and they clearly see a lot of opportunity ahead.
Absolutely. So what do you think? Are you bullish on BJ's move into Texas? What do you think about the long-term impact of their investments in digital? Jump into the conversation. Let us know. Thanks for tuning in to Talk Tickers.
See you next time.